want to go to a chart because I think you and I are on the same page about the panic in the moment of China. Here's a huge China rally, and this is a very contained fall. This is not off a cliff, given how far it went up before. You've seen this before. What's different this time about a contained, measured China pullback?
Well, look, I mean, in China last week, two things I heard, and that was before most of this recent sell-off, of course. But first, it was the notion that the run-up in Chinese stocks was completely disconnected with general sentiment in the Chinese economy, which has been very stable, decreasing growth, but nothing that people are overtly concerned about in the near term. There's actually an enormous amount of confidence in China about the leadership and about the structural developments happening in the economy. And I saw that across the board. I saw that from elites. I saw that from party officials. I saw that from rank and file. But people in the Chinese market, the typical investors, they're not there for years or even months.
They're speculating.
They're there for weeks.
I mean,
That's right.
You and I read Kindleberger, okay? MIT, the classic panics and crashes. This is no different than Kindleberger of a U.S. market when it was not as mature as it is now.
Well, I mean, in a sense, it's even worse because not only is it not mature, but it's also still very much controlled and, as they closed by the Chinese government. Now, there is a problem here. And the problem is that the Chinese government, one of their key reforms is trying to engage in financial reform, to open the financial markets. But that, of course, means allowing investors to take pain.
Can you do that in a communist system?
Well, the answer is you can do it a little, but the willingness of the Chinese government to allow it to happen significantly. Look, if you watch Chinese state-owned media right now, they're all doing what they can to talk the market up. That's directly at the behest of the Chinese government. You actually see Chinese state funds saying that they're putting more money into Chinese stocks. So, I mean, clearly, this is a state capitalist system. It's not a communist system. It's not a capitalist system. It's a hybrid system. But having said that, I certainly don't see, while I see there are problems here, I don't see these problems as saying that suddenly the Chinese economy, the fundamentals around the Chinese economy are any less strong than we thought they were last week.
Yeah, this is a really important point that you're making, which is that the Chinese government is in the middle of a conscious attempt to take a shadow banking bubble and a credit bubble and turn them into equity investment, which turned into an equity bubble. But, you know, what you're saying, the question of the morning is the stock market in China a casino or an indicator? You're saying casino.
I'm saying it's still a casino, absolutely. And the Chinese government would like to change that, but their willingness to move in that direction is still going to be tentative. And I heard that from every single angle. And I think you've seen that play through this week. But that's, again, that's very different from looking at the second largest economy in the world, going to be the first, and saying that there's structural problems.
Reciprocal speaking, I want to tease forward to Greece, and we'll speak to you about that in this hour. Will Greece have a new currency a year from now?
I don't think they will. I mean, it's become more likely than it was, but on balance, the good news...
You would push against Elarian's idea that they move away and they will stay within the euro.
I think that, well, I think they desperately want to stay within the euro, but it still takes two to tango here. If you made me bet, I'd say it's closer than it was a week ago, but I still don't see Grexit at this point.
Okay.